Hey guys, welcome back to another Sunday video prepping you for the week ahead, taking a look at things like indices, the dollar, commodities like gold and oil and silver, and some currencies as well. This week is heating up to be a big one, and I'm going to talk to you all about how July might be the pivotal month of this year. We are honing in on whether or not we are going to get these rate cuts that the market keeps listening for from the Federal Reserve and what that does to indices and commodities and, like I said, currencies as well. We'll be taking a look at all of that here, but before we jump into that, I wanted to show you guys where we're at for the year so far, where my personal trading performance is so far this year. Now, I show you this for a couple reasons. Number one, and straightforward, this is good for my business to show you guys my real P&L, to show you my performance, and to try and keep it real with you on a regulated brokerage. I don't make millions from the market, at least not yet. I'm working towards it. Give me a little bit of time, but I do want to share with you my personal P&L so far this year, which I would consider a pretty good, about average year so far. Not spectacular, not terrible, but not particularly incredible either. So I'll walk you through here what we've got. So we are just past the 6th month of the year. We're going into the 7th. So it is the halfway point when it comes to the trading year. And I wanted to just invite you also, while I go through this, to reflect on where you're at this year. You know, even if you're not making huge profits this year or making a ton of money from the markets or anything like that yet, if you're making progress, take a second to just acknowledge, hey, I've come a long way this year. I've learned something new in the markets. I've made less mistakes. Just take that as a kind of a mini milestone here. We're halfway through the year. So far, and please also remember, I've been doing this for 8-9 years by now. So please don't take this as a comparison or I'm frustrated I'm not here at this point. This is my results after, my 9-year journey, and everyone's journey is unique. So far, I'm about up 10% on the account. This is the main account. This is not my only trading account, but this is my main account that I keep pretty public. We're up 10% this year. We had a really strong start. I was very long gold, very long indices going into the beginning of the year. Resumed a bullish position recently on gold, which has been going okay. I've made some money recently on gold, but not nearly as much as I made in the first portion of the year. I've been bullish on gold all year. I've been pretty bullish on indices, but recently kind of more neutral. And, anyways, I've also played some commodities really well this year. I've made some good money on oil and silver as well. So let's talk a little bit about this. Again, I'm up 10%. Is that phenomenal? Not incredible results, but you have to also remember that this is a larger account size than, the average trader is used to. And I don't say that to brag. I say that, this is, again, almost 10 years into my journey, and I've made a lot of, progress to get to this point. But we're up about 10%. And again, I'm proud with that. For me personally, I'm not looking to make huge, massive gains in the markets. I'm looking to make slow and steady gains at this point in my life. I don't need huge volatility. I'm looking to buy a house. I'm married. I don't have any kids, but at some point, you know what I mean? Like, I'm looking to kind of keep it slow and steady in my trading account and not mess around. And if you're on the same wavelength, do me a big favor, smash that thumbs up button as we get into today's video, and make sure to comment down below what you're trading this week. Let's jump into it. So let's take a look at the S&P 500 here. The S&P is trading at 5481. That's SPX, by the way. And what we can see here is that when we look at the S&P, we've stalled out here recently. And I don't say that this is necessarily a bullish or bearish thing. We are just entering a consolidation phase like we did over here, which could mean a break higher where we just continue, or it could also mean a consolidation before we see a bit of a decline or a pullback. I'll say this. As much as I think that a pullback is appropriate and probably a healthy thing for this market, the stock market specifically, I don't necessarily think that is going to happen. I'll show you something really quick that I was thinking about just before filming this video. If we take a look at the seasonality on a month-to-month basis for the S&P 500, check this out. We're going into July, which July is actually, historically speaking, on the last 10-year average, a very positive month for the year. So expectancy here on the 7th month is to see a 2% incline on the S&P 500. That's a pretty impressive piece of information. So am I betting against stocks as we go into the summer months? No, I am not. I am definitely still going to remain a little cautious, but I'm more bullish than I am bearish and looking for proper pullbacks If we get them, great. And if we don't, I'll kind of continue doing my thing, which is I've been trading a lot of gold and commodities recently. So that's what I'm looking for. Speaking of which, someone actually asked me, one of my subscribers asked me to pull up gold's seasonality for the year, and I had planned on doing it anyways. I think it's a good time as we cross into a new month, as well as the second half of the year, to look at the seasonality for the months and, weeks ahead. July is also expected to be a positive month for gold, as it is also in August. September and October, bearish for gold, and then kind of mixed or slightly negative for November, slightly positive for December. Now, if you remember what I said at the beginning of the video, I made a good bit of my returns this year during the early months. And you can see, I mentioned that it was from gold. It was a seasonal play, as well as the expectations for rate cuts this year. And actually, rate cuts this year are still expected. I'm thinking personally that we probably see 1 to 2, but there's a little bit of an asterisk here. If we get some cooling economic data in the form of jobs data, which we get this week on Friday, or the CPI continues to trend down, or we make some progress downside motion on the inflation story that's been going on. That's a really important component here, because if you're someone like me and you think gold has potential upside, you need to see this inflation figure start to come down. That would trigger the Fed to look to cut rates. Cutting rates would make a weaker dollar, and a weaker dollar would probably be good for gold. Now, other currencies are also seeing some progress towards the rate cut plans. What we can see here is that we've got Europe and the UK, and we can see that Europe and the UK are seeing actually more progress in inflation than the US. The US's very strong growth seems to be a catalyst for why inflation still struggles to go lower. That being said, there are some early signs that the economy is cooling in the US and that it could join the party of rate cuts. That keeps me personally very bullish on gold. And let's take a look at gold while we're on the topic. So if I switch over now to the gold chart here, I'm just going to pull up gold's spot price. I do have a long position. I'm about flat on my trade. I haven't really made or lost anything on this position, but I've made a lot of money this year trading gold on the long side. I've had no shorts this year, only longs. I was long for all of this move, which felt really nice. What hasn't felt so nice is that I've taken a couple L's trying to catch the next swing higher. I actually thought we would continue, did make some money here, and recently have taken a couple losses, made some money on this swing, but really was thinking we would get more squeeze. I still think we might. Here's my thought, technicals on gold. We had this huge level of support. The 2300 level seems to want to hold. Is it a guarantee? No, because nothing in markets are guaranteed or 100% likely to happen. There's always a chance that something changes. What if inflation actually starts to rise and the Fed does not want to cut rates this year? Well, gold's probably going to take my stop loss and kick it in the booty, but we'll see if that happens. My personal opinion, I think that the data seems to be showing we're likely to see a rate cut or two this year. So if we start to see those rate cuts, I would look for gold's price action to actually start forming some higher lows and higher highs. I think a very modest target is to get back to the highs here, but my yearly target technically already got hit. With the beginning of this year, I thought we would hit 2280 by the end of the year, and we did that in just a couple months. That being said, we've chopped around, and since then, my bullishness has kind of picked up again because we're starting to see central banks wanting to cut rates globally. That's a good story for gold, and so I'm looking for, again, a breakout and continuation of this upward trend. Now, the other thing that I want to point out is the Edge Finder's got us a nice reading, a bullish reading for gold. And you may be wondering what contributes to a bullish reading on this thing that you're showing me. This is the Edge Finder, and the Edge Finder is our tool that our team has built. I say ours because I run a software company called A1 Trading. You can find our website, a1trading.com. You can explore all the tools that we build. This one is our flagship product. It's the Edge Finder Pro, and it allows you to look at a ton of different data, and the name says it all. It's a tool meant to help you find edges in the market through market data, which I think a lot of traders neglect because they think it's too hard. But with the help of tools like this, you can certainly make a stab at really improving your fundamentals game without having to dig through 37 articles every single morning like I used to. We built this tool to solve that problem, to help you look at more data quickly. We mentioned, inflation data, and with this week ahead, we've got NFP coming, which could be really important as well. We'll keep track of the NFP data right here to see how it forms, and more importantly than just looking at the data, the Edge Finder then calculates bullish and bearish setups based on the data that's coming in. And what we can see here is we've got bullish readings on the NASDAQ, gold, the Australian dollar, the Australian against the Kiwi, and you can see some bearish readings coming in as well. And so this is the point of the tool. It helps me spot setups based on all of the economic data that we know and love, right? Our GDPs, inflation statistics, CPI, unemployment data, so on and so forth. It's going through all of these different charts and it's saying, hey, inflation still seems to be high, but it's making some progress in the right direction. That's a pretty bullish environment for gold. So that's kind of how we use this tool. Now, once I have this set up, what do I do with it? Well, then I go look at the charts and I look for basic textbook technical analysis. I'm looking for support and resistance. I'm looking for break and retests. I'm looking for simple technicals in tandem with what I believe to be honestly more important, the directional bias that I get from the fundamentals or the economic data, the macro, if you will, that we look through every single day with the tool. That is kind of the purpose behind the Edge Finder. By the way, if you'd like to try out the Edge Finder, there is a link down below in the description to do 30 days to access the tool. If you'd like to get that, again, you can also find out more about it down below with the promo code YTVIP. You can get a discount. And if you're looking to try it for 30 days, there will be information for that down below in the description. Try out our tool. I'm telling you, if you're a fan of the channel, you should get a copy. It is worth it. We work day and night on this product, and I absolutely am ecstatic. I'm more excited about it now than I am all the last 2.5 years, 3 years that we've been building it. So it's got so many new features coming. We've been adding so many different economic charts, so on and so forth. So definitely get yourself a copy this year. And little bird told me that we've got some discounts coming. The summer sale might be dropping this week. So if you're a super fan of the channel, let me just give you a little bit of a secret heads up. This week, we're going to be doing a really big discount on the Edge Finder. So do your homework, check it out, head over to our website, A1 Trading, and get yourself ready for, again, the chance to pick it up at the lowest cost possible. I can't say any more than that. I've sworn to secrecy. My marketing team has some more updates for you guys soon. Anyways, that's my thoughts on gold. I also wanted to touch back for a second and take a look at the COT data, okay? The Commitment of Traders data just came out on Friday. And what we've got here is some interesting stuff, okay? Gold remains the most bullish on a percentage long to short ratio of contracts traded, still very long biased. Okay, 88%, dang, that's actually, I think it rose. Did it rise? Did it rise? It did rise, my goodness. 284,000 versus 38,000. I mean, that is a significant difference. So let's have a look at, okay, this is the overall net positioning. And I always like to break this down and clarify. Net positioning is good for like longer term traders and investors who are looking at this stuff. But as a trader, what I really like to look at is this second chart that we've built, which is the latest week to week filing, where we can actually see in terms of a net change on a weekly basis what happened. So for example, in the latest filing, let's take a look at like the S&P 500 as an example. They closed a bunch of long contracts, but they closed significantly more short contracts. On a net percentage basis, the way our thing calculates this is it looks at, the change week to week and it says, what are we left with? And there was a pretty significant bullish shift for the SPX. Well, what about silver? What about the NASDAQ? What about US oil and gold? They bought as a kind of aggregate sum of their actions. Okay, well, what about on the other side? They sold the dollar, they sold the euro, they sold the Dow, and they sold the Nikkei. Sold copper, pound, USD, again, a couple other things here, but these are the bigger sells. What in the world? The Nikkei sold so massively. My goodness, they added so many short contracts. That's pretty significant. But anyways, we use this as just a gauge of what smart money is kind of up to on a week-to-week basis. Is it perfect? No, but it's a really powerful tool, and a lot of our traders who use our products love the COT page. Again, stay tuned. That discount is coming soon for the summer sale. So can't tell you any more details, but we were doing some really fun filming for the summer sale that's coming up. Just wait. It's fun. Okay, let's keep going. I want to talk about the dollar here. So the dollar, I've gotten into some interesting conversations recently because I've been saying that I think that the dollar could, in coming weeks and maybe months, continue to advance overall. But I'm also bullish on gold. How can those two things coexist? Well, they can, because remember that it's all about, and I say this frequently, the US dollar is the USD versus the whole earth, right? Globally. What other central banks? Geo. So USD versus all shows that most central banks seem to be cutting right now at a faster pace than the US. So that makes the dollar look strong. But if you remember that gold versus, what is gold versus? Gold is versus all fiat, right? So including the dollar, gold looks good in my view, because overall gold could go up because most central banks are cutting rates. Looks like they're going to ease monetary policy globally, and so gold has upside. Meanwhile, the dollar also could have upside because it may cut rates at a slower rate than other central banks. Hopefully that makes sense. If it does make sense, smash the thumbs up button. I don't know, do something in the chat. But you get my point. Like these two things actually can coexist. That being said, I do also think that upside for the dollar is limited, because I do think that the economy in the US is starting to slow. And with that slowdown, we may see inflation also come down. If inflation in the US matches its peers or starts to come down on a more meaningful level, it's not going to explode higher unless other central banks are just going into like disinflation. So I think that there is some upside for the dollar on a technical basis, but I personally think from a fundamentals perspective that the upside is limited. I don't see, the dollar exploding up to 109 this year, unless something significantly changes and we see inflation start rising again in the US, and the US is not looking to cut rates this year. So we'll see. But for me right now, in terms of the dollar, just a very choppy chart, just a daily range. We've not really made a significant breakout either ways in a while. You did have some kind of choppy breakouts here, some very, very slow uptrending charts right here, which shows me, the dollar is timid up at these levels, at least for now, unless something changes. If you get a really hot jobs data point this week, if you get inflation that comes out in the coming weeks that's really hot, yeah, the dollar could take this out and break higher, and we'll adjust accordingly. But for me, I think the dollar upside is limited. If anything, I'm a little bit more bearish on the dollar if it squeezes higher, and in the meantime, just very neutral against it. So I did mention earlier that on the top setups page, we had a couple bullish readings. The Australian dollar actually looks like it might be an interesting one for me this week, and I'll show you this chart. I'm looking for a breakout above the 67 level. If you get something like this, if we get a couple days of green candles, any pullback, I'm actually a buyer, I think, of the Australian dollar, as long as the edge finder continues to give me that bullish confirmation. So I like that. I'll be looking for the Australian dollar as a possible setup. And back to the dollar index for a second. I think, we've found there is something worth mentioning for the bulls, which is higher lows continue to form. But if you're kind of like me and you're more leaning to the bearish side overall, let's look for some lower lows and lower highs. I'm really kind of not going to anticipate when that is, unless we get up into this area. If we squeeze up into that area, I'm a little bit, definitely more on the bearish side, but we will see. Right now, we're just kind of in no man's land. While we're on the currency subject, let's take a look at the euro. The euro actually looks pretty weak to me. I think we had the euro dollar as a bearish setup. I don't think it's still there. No, it's not there. It was there on Friday briefly, but I'm going to keep an eye on the euro dollar as a possible swing trade. If it does set up a bearish reading on the edge finder, I may look for possible short side continuation plays on this one. But again, I need that edge finder confirmation before I touch it. I do like the euro more to the downside than to the upside currently, unless we get a really cool jobs data point this week, in which case I'd want to stop out if I was short. So let's see, where else can we go? In terms of setups, I did want to talk about the NASDAQ just a little bit. NASDAQ had kind of a nasty sell-off right in the end of the week last week. Here's an hourly chart. Check this out. We had a huge pump. This was an all-time high right there. And before you get all excited and say, haha, that's why you don't touch all-time highs, the NASDAQ has made like all-time highs for like 38 days in a row. So anybody who says, oh, you never buy an all-time high, just know that all-time highs can actually be incredibly bullish signals. Now, you still want to, in my view, I still would like to wait for pullbacks and be constructive with it. But all-time highs are a bullish signal. And anybody who says otherwise, ask yourself, why is it making an all-time high? Most of the time, it's because something really bullish is happening, and there's a good chance that all-time highs turn into more all-time highs. That being said, when we talk NASDAQ, we've had so many all-time highs that my red flags start throwing up, and that sounds weird. I'm not vomiting, but you get my point here. I am starting to get a little bit nervous as we continue to make green every single day. People are just getting used to the NASDAQ going higher, and I have vivid memories of 2020, 2018, 2022, years where the market did not go straight up, and it was very painful. If you were in risky assets like Bitcoin, if you were in, the NASDAQ, and you were in, you saw substantial drawdowns. God forbid you were in higher risk stocks. If you were individual stocks, if you got sold on that stuff, you can get into a lot of trouble. And while I don't think the bull market is over, I do think that there is a possibility with this kind of technical lower high, that if you break this level here, there's a good chance that the NASDAQ gives back some of its gains here. I'm by no means saying that the second half is bearish. I actually think there's a solid chance that the NASDAQ continues higher this year. That being said, pullbacks are innocent until proven guilty. So if we come back into this area, I might take a stab at longs, but also know that even if I take a stab at being long, stops have got to be in play. And if this thing breaks and I try again, same principle applies. Let's say I'm long here, and stops need to be in play, because again, the last thing I want to be caught in is a really big give back in the NASDAQ in the coming months. That being said, in my personal view, these dips for me, according to my strategy, as long as the edge finders continue to give me a setup, are buying opportunities to try to ride this thing out. It does still seem like the next move from the Fed is going to be a rate cut. Jobs data is cooling, but we're not in crisis mode. PMIs are cooling, not in crisis mode, but as long as the music's playing, I'm going to keep being a bull. But once the music stops, I've got to use stop losses to get me out of a reversal in the NASDAQ. And that reversal, let me just tell you now, will be nasty. There's a lot of people who are they're drinking the Kool-Aid when it comes to the thinking that the markets don't go down. So many people I see on social media, they just buy. They never, they are always, bullish, thinking that it's never going to go down. And then when you get hit with a couple years like this, it is very painful, to have a strategy that's just buy the NASDAQ. That's your whole profitability standpoint. When that stops, it's not fun. And I know that from experience. My 2022 year, I talked about that, I've talked about that many times. Like, my trading performance during 2022 was not good. I had a red year because I was really long gold and NASDAQ, and I held on to those ideas a little too stubbornly and gave back some serious profits during that year. Anyways, thoughts on the NASDAQ again. Overall, still bullish, but remaining cautious on that. So we'll keep an eye on that. Also, the S&P 500 just updated onto this list. I think, I don't know where it was a second ago, but I am bullish on the indices, but waiting for constructive pullbacks. And we will see if we get those. Let me just refresh this, make sure I have all the stuff. Yeah, okay. So, yeah. Anyways, guys, last thing I want to say is that if you're new to my channel and you are looking for a brokerage to trade with, I would ask for you to help me out. On my channel, I have several different brokerages that have partnered with my channel. They are my sponsors, basically. They help to pay for the editors and the team and all the stuff that we do here behind the scenes to make these videos every day. If you are looking for new brokerage, check out the links down below in the description. There are several of them, and all of those brokers can be traded directly on TradingView, but also all of the brokers I have relationships with, and I've set up some special perks for you when you sign up using those links. Some of them have deposit bonuses. Some of them you can get free stock shares when you sign up. But again, go browse. If you're looking for a new brokerage or a better brokerage, check out the links down below in the description. I really appreciate you if you choose to use them. They are, again, affiliate links, so you'll be helping out my channel. So if this was helpful to you, hit that thumbs up button, check out the brokers down below, and have a great trading week ahead. See you next time.